The FTX failure has actually been a catalytic event, and it's been good for Bitcoin. I think it's really highlighted the strengths of proof of work, highlighted the strengths of a network based upon Bitcoin mining that's a commodity. I think there's been a lot of confusion about the difference between proof of stake and proof of work. And tokens like FTT token were based on staking algorithms and the like, and they weren't backed by energy. The FTX failure has been a very visible educational event that's educated an entire generation of lawmakers, policymakers, journalists, and investors as to why Bitcoin is different than FTT token or Terra or Luna or Serum or these other Air tokens. And it also really underscored the benefits of an asset you could take self-custody of without counterparty risk. So although it's been painful for the industry, I think it's actually catalyzed a lot of positive developments, both in the education of investors, as well as in the DC regulatory environment. And generally, what I've seen throughout all of the coverage is a growing appreciation for the benefits of Bitcoin and Bitcoin mining through this kind of debacle.
The executive chairman of MicroStrategy and prominent Bitcoin investor Michael Saylor recently delved into the expanding influence of Bitcoin mining in the Bitcoin network, particularly in light of the FTX collapse. According to Saylor, the events of 2022, while unfortunate, served to propel Bitcoin to the forefront of the energy sector. At a Bitcoin Mining Council Q4 briefing, Saylor, a founding member of the council, discussed how the downfall of FTX has emphasized the significance of mining to the network's security and decentralization. The council was established in May 2021 after Elon Musk halted Tesla's acceptance of Bitcoin payments, citing concerns about the network's dependence on coal as a primary source of energy. Saylor convened the first meeting of the council to promote transparency, restore trust in the process, and educate the public on Bitcoin mining. As stated on the council's website, Saylor is a vital member of the council, serving as both a facilitator and a proponent of Bitcoin. Since the inaugural meeting, which was attended by several major North American miners, the council held quarterly reviews to examine the progress of Bitcoin mining with a focus on sustainable energy usage. During the Q4 review, it was revealed that the Bitcoin mining hash rate has increased by 45% year over year with a sustainable energy mix of 58.9%. The council also reported that the Bitcoin network consumed 17 basis points of global energy and was responsible for minimal carbon emissions at only 11 basis points. Here's more of what Saylor had to say. But before we do that, if you like finance videos, please support our channel by liking the video, subscribing, and dropping your questions or comments below.
I'll start. I think it's important to note that the security of the Bitcoin network, it comes not just from the operation of Bitcoin mining data centers, but it also comes from the shipment and upgrading of Bitcoin mining equipment and semiconductors. And so you've had a couple of companies that have dominated the industry, and you've got Bitmine, you've got WhatsMiner, but to have Intel enter with a lot of capital and a lot of commitment, I think is a good thing. It creates a strong North American-based semiconductor manufacturer that is committed to Bitcoin and Bitcoin mining. I think it'll be good politically for Bitcoin in North America to have Intel behind it. I think it'll be good for Bitcoin miners to have another strong vendor to choose from that'll create more competition at the equipment layer. And I think it creates more resilience in the Bitcoin network because you never want to be dependent upon just a small number of equipment manufacturers. So the more you have and the more diversified, then the more decentralized the network is. So I see this as it's a welcome improvement of decentralization and resilience, while at the same time it undermines narratives that the equipment is sourced out of China, and ultimately what you really want is you want a strong Chinese equipment manufacturer to encourage everybody in the China sphere of influence to trust Bitcoin. And you like a strong North American equipment manufacturer to encourage everyone in the Western world to trust Bitcoin. And it's always good to have choices for negotiation if you have to buy the equipment. So I think the result of that is great for the network. And then the last point is it will accelerate the improvement in network efficiency, both the energy efficiency. It'll drive us down the joules per terahash curve faster with another aggressive investor and equipment manufacturer. And I think it also helps us build a mechanical advantage of ASIC technology versus general purpose CPU technologies. And as the ASIC technology advances, that creates a mechanical advantage for Bitcoin security. And ultimately, that's very auspicious for the entire network and the asset class. I will just add to that that in the last 24 months, all of the events around the crypto industry and the Bitcoin mining industry have brought Bitcoin to the forefront of the energy industry. And so there might have been people in the industry that didn't really know about Bitcoin or understand it in 2019 or 2020. And in 2021, they started to hear about it. But 2022 was kind of a coming out party. And now it's much more common to speak to executives in the energy industry and have them thinking about Bitcoin and taking it very seriously across. You've got nuclear, it's a solution for nuclear, a solution for natural gas, a solution for stranded energy sources everywhere in the world, a solution for stranded hydro. You're reading stories in the Tech Review about stranded hydro plants in the Congo where it's being used. There really isn't a day when you don't read a story about some energy provider that was struggling with the problem. And I think in the height of the bull market, Bitcoin mining equipment was getting very expensive, and they might have been a bit afraid. But now the equipment has been much less expensive. There's more equipment on the market. You've got a whole set of industry restructuring dynamics where people are out actually knocking on doors and talking to the energy companies who are extremely well capitalized yet conservative. So this is exactly the time when they start to look at this and think, this is about the right thing for us. We can buy the equipment much cheaper than it would have cost us a year or 2 years ago. There's an easy partner. There's a lot of companies that want to partner with us. We've got a problem, and we've got lots and lots of examples of success stories. So I think that Bitcoin is becoming increasingly intertwined with the energy industry, and it's pretty clear that it's synergistic. If you're a Bitcoin miner, you kind of have to have a good strategic relationship with your energy provider. I think that's been made abundantly clear in the past 12 months. But if you're an energy company, you can't help but notice there's this clean, high baseload user of energy that can operate intermittently anywhere in the world. So this story of Bitcoin and energy is just getting better and better and getting stronger. And if anything, it's hard to see if you're an energy provider how you can get to world-class efficiency and economics if you don't have Bitcoin as part of your grid mix at somewhere in the grid. It's just important for people to remember that proof of work is a security protocol based upon two inputs: raw energy or electricity, and then also semiconductor hardware hashing capacity. And what's happening is that the hashing capacity, the ASIC efficiency, keeps improving, and it's, as Ben pointed out, it's improved by 5,800% over 8 years. It seems to be marching up at 15% a year, somewhere between 15 and 20% a year. It might slow down or go faster from time to time, but when you're running at that level and you start to think about the exponential impact, what you can see is that that we're in the middle period, I think, of Bitcoin mining. I think the early years, like the first few years, it was very energy intensive. Back when you saw those non-ASICs, when you didn't have ASICs, you're using CPUs and GPUs. It was on the margin more energy intensive and used raw power. And we're in the middle years where it's kind of half energy. The story is half energy, and the other story is half technology. And then if you roll the clock out more than 20 years from now, if you go out 30 years, between 30 years and 60 years, there'll be a point at which the network is secured more by the special purpose technology, and to be dominant in Bitcoin mining, it's going to be a capital intensive, technology intensive exercise, and your ability to get energy is going to become less important. Now, mind you, not in the next decade, but the implications is the network morphs from energy intensive to technology intensive. And a simple analogy would be, if you go to the agriculture industry, when people they didn't have tractors and internal combustion engines, everything was labor intensive, and you had an army of people farming. And then machines came along, and eventually, if you're a farmer, you better have a tractor, because it doesn't matter if you have 10,000 people. What matters is if you have the equipment to manufacture the food. So I think, Bitcoin's right in that middle period where energy matters and technology matters, and now there's a little bit of a race, and the question is how much faster will the technology evolve? And with the entrance of Intel, it kind of suggests that technology is going to evolve faster than it would have otherwise evolved. And eventually Bitcoin mining is a technology industry, and Bitcoin is secured by technology. And that's really good, because what that means is that over time, the security cost of the network is going to fall with the improvement in technology. And that's important. When you get to $100 trillion on the Bitcoin network, you don't want to have 20% of it staked, like in a proof of stake network. What you want to have is billions of dollars of special purpose equipment that secures all of the monetary assets, and it secures it 1,000,000 times more efficiently than general purpose equipment. And that's what's going on right now with ASIC semiconductor technology advances. And ultimately, it's a good thing for Bitcoin. It's a good thing for Bitcoin miners. It's a good thing for anyone that's going to be a technology leader in the space, like Hive, that's embracing, Intel and variable clock rate machinery. This is the future of the industry. Once upon a time, it's a question of how hard could you work and how cheap was your labor. But clearly, that's not an industry you want to be in long term if you're smart.
Thank you for watching our video. For more finance content, don't forget to like the video and subscribe to the channel. And remember, when in doubt, just HODL.